in points in Forex market. So I'm going to be explaining things about pips to you today because these are one of the little things people don't really understand about the Forex market. They really think, when they say don't lose more than 25 pips or go for more than 80 pips, they get confused. And well, I'm here to help you, figure that out and help you resolve that difficulty, in understanding what pip is all about. So pip means percentage in points. Pips are the smallest, price movements in the Forex market. They represent the fourth decimal place in most currency pairs, except for pairs involving the Japanese yen, where they where they typically represent the second decimal place. Pips are used to measure the change in values of a currency pair, determining profits and losses in trades. So today I want to help you understand what pips is all about and how you can go about a successful trade without losing money, depending on your lot sizes, and how you can calculate your lot sizes as well using pips. But let's talk about what lot sizes is about. So lot sizes in forex trading refers to standardized contract sizes used to control the volume of a trade. There are three main types of lot sizes. We have the standard lot size, we have the mini lot size, and we have the micro lot size. A standard lot represents, 1,000 units of the base currency. A mini represents 10,000 units, and a micro lot represents 1,000 units. So lot sizes allow traders to manage their risk exposure and control the size of of their positions. So we're about to go into learning how to calculate this thing. So stay with me as I take you further. So understanding the lot size is very easy and very simple, right? So over here you can see we have 0.01, which represents 10 cents, which is the micro lot size, and we have 0.10, which represents $1, which represents the mini lot size, and we have 1.00, which is $10, which represents the standard lot size. But I want you to understand that we have other ways of how we can go about this. You got it? We have other ways of how we can go about this. You can also go like this: 0.02, which is 20 cents, which falls on, also under the micro lot size. So I don't want you to think that, okay, because we have just three lot sizes here, then that is the only thing, we can go on about to use. So I want you to understand this is what lot sizes are. So now I want to speak about how you can calculate your lot sizes with your percentage in point, which is the pip. So now, how to calculate your lot size with the percentage in points, which is the pip, because you can go on a place where you get signals from and they tell you to not put more than, take more than 25 pip loss, and you should go, let's say 1 to 3, risk reward, which means the 1 is the loss and the 3 is times the loss. So let's say 25 times 3, which is going to give you your reward. So the risk is 25 pips, and the reward is 25 times 3, which gives you your reward. So I want you to understand this thing and have it at the back of your mind. So now we're going to talk about how to calculate your lot sizes together with your pip to get your risk and reward. So I'm just going to give you the simplest way to go about this. So you come here, you go to my FX book. You see over here, it opens here. You go to position size calculator, right? So when it opens, now we have different types of currency pair, right? So you choose the currency pair, which you seek for to trade. For me, I like to trade XEU USD a lot, which is the gold. I trade this between the London sections and the New York sections. So this is one of my favorite thing because not like it's very easy because it has a high volatility, but It's one of the places where you can make money very well and also lose all your money. So you just have to be careful. So here now, let's say you have an account of, let's say you have an account of $5,000, right? And the risk ratio, your risk ratio is depending on how much you want to lose, right? The percentage of this 5,000. So you have a $5,000 account, and let's say you want to use 5% of the $5,000 to trade. And if you check the 5% that you want to use in trading, what is it going to come out? So the 5% of, $5,000 is going to give you $250, right? So when you have a stop loss of 25 pips, you have a stop loss of 25 pips, right? You click on 25 pips and it says here trade size lots. So over here, I'm going to put 1 because I'm taking just one trade. I'm just using this as an example for you so you can understand how to calculate this. So when you click on calculate, now you see what's showing you here. It's showing you have to use a lot size of 0.01, which is 10 cents, and the units 1,000, and the money $250. I believe this is clear to you. You have to use a sizing of 0.01, which is 10 cents. So now I can actually show you another way of how you can calculate the pips even without using this. It's very easy. It's very easy to understand. I've been doing it this, the manual way. I just wanted to show you the easier way so, you can go about, understanding all this, without getting it all over your head, right? So how do I calculate my own pips? So now, let's say we are in a market and I have an entry of gold. Let's say the current price of gold right now is 238.05, right? I have this entry. So now there's something I need you guys to know about pips because I haven't really explained this. So now I'm going to explain this to you. So this here, where the arrow is pointing, is called a pipette. Pipette. Right? And the zero here is called the pip. The pip. So how do we calculate this? The market is closed right now, but I'm going to make it very clear for you to understand. This is the current price of gold, right? This is the current price of gold. And each digit, this counts. When this number here, which is the 0, gets to 1, it changes to 1 like this. It becomes what? 1 pip. So now, imagine, I'm going to go with you with this, so I want you guys to really get it because I like to break things very down very, very possibly for everyone to understand. So, excuse me. So now, when this changes to 1, remember this keeps moving, right? It moves from 6, 7, 8, 9, and comes to 10. Right? Now it's going again. 11, 12, 13, 14, 15, 16, 17, 18, 19, then comes to what? 20. Right? When this gets to, when this keeps going and gets to 90, this place turns to what? Now it's 2338. It turns to 9, 0, 0. You get it? So now it turns to 900, which makes it a total of what? 10 pips. This is a pipette. The pipette is not really, recognized because it's just like a clock that keeps ticking, and when the second ticks, it gives the minutes an increment, when it goes close, clockwise, you understand? So this is what pips is all about. So pipette is not really rated. Let's say it's rated, but it's just what ticks to bring out the pip. And the pip, when it goes up to a certain number, it changes and give this one as well what? An increment. You understand? It gives this one an increment, and this way you understand your PEEP. And now let's talk about how you can calculate it manually, right? Let's say you want to calculate the current price from, in the market, of when you enter the market, and you want to know how you can get your PEEP. You understand? So now I'm going to help you do that. So now this is the current price here, which is 2340. This is an example. Just pay attention. 2340, and you're buying on a bullish market. When the market is going up, it's called bullish, and when it's coming down, it's called a bearish market. So the bullish market, the current price, when it's on the bullish market, plus the PEEPs, or the numbers of PEEPs you want to get as a reward, that is going to be your take profit. So let's say you want to take a $10 a 10 PEEP profit, right? So you go 1.0. So now 234.00 234.00 plus 1.00, it's going to give you 2341. You see, it's going to give you what? 2341, which means it went up equals to 2341, which means it went up to what? Just 10 pips. Remember, there's still 00 here. 10 pips. So one thing I need you guys to understand now, when you see this here, when it moves from one number and it changes to another number, let's say 234 changes to what? 2342, that is 10 pips. When it changes to 2343, that is 20 pips. When it changes to 2344, that is what? 30 pips. So now that is your profit. So in order for you to calculate how many pips you want to lose, let's say you want to lose 25 pips. You want to lose 25 pips, you come here and do 2.5. I will explain to you why I'm doing 2.5, why I might not just, why not just 25. So I'm going to explain to you that as well. So now you come here, you do 234.00 minus 2.50, right? Which gives you 2337.5. Gives you 2337.5. So now this is going to be your stop loss. So now how am I getting this 2.5 thing I'm adding here and calculating it this way? So it's very simple. I want you to pay attention, right? So now you understand how I came here and explained to you that 0.01 is equals to 10 cents, right? So now this is how the lot size go through the market and count in the market. So if you want to calculate it, you wouldn't be calculating it with the normal dollar amount. You're going to be using the lot size symbol to calculate it. So if it's 10 pips, how can I calculate 10 pips in dollars? So 10 pips in dollars is, let's say, depending on your lot size, 10 pips is 10. Let's say we're using an example of 10 cents. You don't want to lose 10 pips, right? So let's say 10 cents was your lot size times 10 pips. That gives you what? $1. You get it? 10 cents. So that means if it moves from 2340 to 2341, if you're using the 0.01 lot size, which is 10 cents, you make $1 per moves. You understand? But how do we get to 2.5? The 2.5 represents the amount of lot size. The numbers of time is going to move to get to that 2.5 is what you're checking. But when it comes to calculating it, you go 2.5, which is 25. 25 over here as a lot size represents what? 2.5, because 1.0, remember, 1.0, 1.1, which is 11, you then go downward that way and get to 2.5. That way you can understand how you can calculate your pips. So this is the manual way. Not everyone can understand. That is why I've shown you how to do it, using, my FX here book.com, using your position size calculator. So now I want us to talk about something else, which is, the currency pair. A lot of people still have difficulties, on understanding what currency pair is about. So over here, when you come up here at, just follow my mouse, you come up here. This is where you can search for any currency pair, you're being told to enter the signal for. So let's say you're looking for USD CAD, which is USD Canadian dollars. You tap on it, and this is how you can get it. You understand? So that is basically, and that is all for everything regarding pips and how to calculate, how to get into your currency pair. I believe if you're in Forex already, you already understand how, to go about getting to your currency pair, calculating your pips, understanding your lot sizes, and now you can use this to enter any market you want to enter and calculate your risk and reward. So I'm going to add one more thing as a supplement for you guys. There's a tool here called long and short. So this long and short can also show you how many pips you're going to be losing in the market or how many pips you're going to be making. So follow me as I show you this. Let's say this market is here, right? And we're expecting a bullish market. Excuse me, I'm going to have to bring this back. Just let me zoom in a little bit so it becomes clear to you. So we're expecting a bullish market here, right? And over here, I want to choose the long, and I want to enter the market from this point where you can see the the horizontal line. So I want to enter from this point, and now this is the red part here shows me my loss, which is 78.1 pips. If you look down below after the stop, 0.00781, 0.58%, 78.1, that shows us the pips. So that is a pip, 78 pips. You understand? At the top as well, it shows us what? 78 pips. But now the reward ratio here is not even up to what? 1 to 2 reward ratio or 1 to 3. So let me show you how you're going to know what 1 to 2 or 1 to 3 reward ratio is all about. So you just drag this up. You keep dragging up. Keep looking at the middle, right? You see something like risk reward ratio. You see it's on 156, 159, 160. It keeps going and going and going and going till you get to 3 or 2, depending on what you want. Most people do 1 to 2 reward ratio. Most people do 1 to 3 reward ratio or above, depending on what, you really want. You understand it? So now this is going to be 1 to 3 reward ratio, which is what most people really do. I do 1 to 2. Most times, depending on the market condition, I just do 1 to 1 reward ratio. You understand? So now this is 3 here, and we have 78 pips. And now, if you're going to be earning any money from this market, you're going to be making 234 pips from this market. If you're using the 0.01 lot size, which is 10 cents, and you're making money from this, and let's say you're in a profit, then you're using 0.10 cents times 234 pips, right? You're going to be making $23 from this. But if you're using the mini lot size, which is $1, you're going to be making 234. And if you're using the standard one, which is $10, you're going to be making, $2,340 from this trade. So this is basically and all you need to understand about, the PEEP, the lot size, and how to calculate, how to go about them, the risk and reward, the currency pair. It's all into this one video. So take your time, study, understand, do your own calculations, and make sure you apply risk management in every trade you're doing. You apply your psychology, avoid greed. Be very careful, in any trade you take. Get your confirmation before you go in a trade. So see you guys in the next, video. You have a good one. Bye.